Hello and welcome. You're watching us here on Chartbusters. I'm Mangala Malu. With me, Nigel D'Souza joining shortly. Just keep an eye out on the markets right now. That's, the chart which is busting right now on the way down are the markets themselves. The Nifty currently below, just slightly above that 23,700 mark after hitting levels below that 23,700 mark as well. It was led lower by the Nifty Bank, and now it's the Nifty Bank which is trying to make an up move once again. So if you pull up the intraday chart of the Nifty Bank, it's been fairly volatile. Dips have been getting bought, but with equal ferocity, those up moves have been getting sold as well. If you look at the last three, moves on the Nifty Bank itself, they have been that of a sine wave, and currently we're at the top end of that sine wave, a bit of a recovery once again from the highs. The question is, where do we go from here? But the pain in the broader market stays as well, with 2,100 stocks declining for just about 278 stocks which are higher. So we'll keep an eye out on the mid and the small caps as well. It's also an important day from an IPO perspective. We have one IPO opening and two important ones listing as well. We had Swiggy, which listed at a premium to its issue price. The other one is Acme Solar, listing at a discount to its issue price. But from those levels, it has seen a bit of a recovery, but currently still holding with a cut of almost 6% as against its issue price of 289 odd rupees. Nikhil Dhingra, who's the CEO of the company, joins us to discuss the company's post-listing plans. Thanks a lot for joining in. Congratulations. It's a momentous day for your company. While the day is momentous, the big question is on your EBITDA run rate. I've been looking at, your EBITDA over the last few years that you've reported in your red herring prospectus. It has increased, and if you annualize the first quarter numbers, it comes to closer to 12 to 1300 crores this year itself. So where does that number grow, and what is a sustainable run rate quarterly for an EBITDA for the EBITDA for a business like yours?
Right. First of all, many thanks for having us on the show. So in terms of our business, we are selling power in long-term contracts to the government, 25-year PPAs we have. And of course, as you know, in a renewable power, the good thing is there is a very low operating expense because it's a small maintenance of the plant, which is a very small number. So in effect, at the project level, you get a 90% plus EBITDA. And of course, when you are having a holding company, the operator overheads reducing, you get a more than 86-87% kind of EBITDA, which is fairly predictable. And of course, across our projects, this is the number we have been doing. So, our company is an aggregate of all the projects we run. And of course, we have a large projects in terms of the last year capacity. And now this year, we have operationalized 1.8 gigawatt of capacity. Last month. So of course, as you know, it's a very predictable revenue, but of course it increases in a quantum manner once you operationalize a new project. And that of course a new project is a very lump sum addition. And of course, as we move forward, we have a lot of projects coming up. So each of these projects it will add the EBITDA, let's say proportionate to the capacity we are adding. And yes. As we move forward, let's say few years ahead, 2 years ahead, the tariffs are higher because we are doing firm and dispatchable renewable energy, hybrid power projects, which have a much higher tariff than the plain solar. So you will see that these numbers will go up. It's a very simple maths in terms of the tariff, and that is all reported because the revenue is a multiplication of generation and tariff. And as you see, the EBITDA will move as per the operationalization of the project. So the focus for all of us at the company always is to get our projects operationalized in the time and cost which we have budgeted for.
All right. Hi, Nikhil. Good morning and good to see you. And you mentioned predictable a few times in there. So, you're going to be increasing capacity. I'm looking at your capacity. It appears that your capacity is going to go up by closer around at least 70-80%, right, in the next few years. I think you're talking about 6 gigawatt by December 2026. So, fair to assume that the EBITDA number as well goes out proportionally, which means from around this 1100 crores, the number will look closer to around 1800 to 2000 crores. Which is mathematically, is it possible?
No, actually, it's a very PPA to PPA specific number. So it will be much higher than the number you said, because this number which you said will be reached almost by the capacity we are operationalizing this year and maybe the next year. So as you know, we have around 1800 megawatt peak of operational capacity in FY24. And this year we have already energized a 1800 megawatt plant. So effectively our capacity has got doubled this year in terms of the megawatt peak. As we are moving forward, what is happening is these PPAs are FDRE. So the effective capacity which we are seeing is 6 gigawatt is effectively much more, because to produce 1 megawatt of a FDRE project, you need to install effectively 3 megawatts. Because you are giving a higher CUF, PLF in the thermal language. So basically, renewable does a CUF in solar around 30%.
Nikhil,
but
Nikhil,
FDRE project,
Nikhil, Nikhil, I can sense the passion that you have built this business, which is great news, and your understanding as well as par excellence. But the stock market would like to understand some numbers. As you're explaining to us, capacities are going up. So should we assume that in FY26, the EBITDA number will be more than 2,000 crores? Is that okay to assume?
So what I can say is that FY25 will have partial capacity, because the capacity got operationalized in October. So we will have you can say a 35-40% jump in FY25 in terms of the numbers, because the partial capacity is operational for the partial year. Capacity will be fully operational, but it will be operational for a partial year. As we move to FY26, we will see the full impact of the capacity which we have operationalized this year. Right, so you can say that will be the number which we are saying will be seen in, let's say, 1700, 1800 odd will be seen in FY26. And of course, as we move to FY27 and 28, bulk of our capacities which we have signed will come online. So we will move from, let's say, this 3.67 gigawatt peak which we have today to a much larger number, which will be more in terms of contracted capacity around 6.3, but in terms of effective capacity around 9 gigawatts. So if you want to just multiply and assume a number basis gigawatt, that will be the number to look at. 9 gigawatt odd capacity, which will be a sum total of the renewable, the solar we put, wind we put, and the batteries we put. So that's where the number in FY27 and 28 will be much higher than FY25. Of course, as we move forward, we will evaluate how to communicate the same to the market, because it's the first day for us. So of course we have the tariffs and the commissioning dates mentioned, and the CUF also mentioned in our prospectus. So it's a straight match, but the number will be quite higher than the current number once we operationalize the projects which are coming up in by December 26, which you just mentioned.
Let's keep it very simple then. Your capacity, as you pointed out, is likely to more than double, right? Assuming that the prices are, a lot different from what they are right now, and they are perhaps at a discount to what they are right now. Is it fair to still assume that your EBITDA can double once your entire capacity comes on stream? Let's put it that way.
Of course. It will. What I can say is it will more than triple. It will more than triple if whatever we have contracted and whatever is in.
By FY28, EBITDA number will triple in comparison to last year.
By FY28, FY28, if you assume the same EBITDA and the tariffs we have already got, it can triple.
So 3,000 crores is what we are looking at. Very quickly, what is the updated net debt number post this? You've raised some part of money, 1,800 crores.
Sorry, it will triple from it will triple from FY25 numbers. So it will be much higher than 3,000. So it will be definitely much higher than 3,000.
All right, we'll take that point. Thanks a lot, Nikhil, for joining in. We'll obviously have a lot deeper conversation at a much later date, perhaps when you report your first quarterly results as well. For now, we'll let you, enjoy the day one of listing on the stock markets as well. Speaking about day one itself, there is a day one for another company too. We do have Swiggy. Let's move over to the other new addition to the bourses. Food delivery platform Swiggy lists on the exchanges at a 5% premium, listing at a 408 rupees. Listing at 408 rupees, a premium to its offer price. Let's listen in to the management addressing the press.
Startups, particularly in the food delivery. So, what is the company's strategy to counter this?
Actually, we're not familiar with these zero commission percentage startups. Is there any specific names that you want to talk about? ONDC is, of course, a different paradigm. If we're talking about ONDC, I think, look, as a company, every category that we operate in is incredibly dynamic. The landscape keeps changing every few months. And our job as a company is to keep making sure that the paradigm that we have is still serving consumers the best, because consumers run the business. So the moment there is an operating model that is possible to serve consumers even better, then we'll be all over it.
Mr. Majeti, the CCI is probing if the company had used exclusivity arrangements, specifically in the food delivery business, and there were any violations in the competition laws. So what is Swiggy's stand on this, and how can you update on the same, and do you see any kind of an impact due to this? My second question will be, going ahead, what are the goals and plans for Instamart?
So maybe on the CCI question, I can take that. So what has come out in the media recently is just that there are certain initial observations with respect to business practices. We are not in receipt of still the detailed findings, and when we will receive them, we will appropriately look at the. So it's a very initial stage of the inquiry, but we are very confident of the business model that we have followed, that they do not contravene any of the existing laws in the country, and we're very confident on that. On coming on Instamart, I think we have talked about the industry growth rate being very, very solid or stellar for the next 3, 4, 5 years. The consumers are continuing to expand their requested selections on the platform. We see a lot of null searches for newer category, and we have continued to expand our overall range of SKUs available on the platform. Even if you look at the last 12 months, we have more than doubled our available number of categories as well as the number of SKUs available on the platform, while reducing our speed of deliveries from close to 17 minutes to 12 minutes on a national average basis. So these are solid inputs that are going into growing the category, and we will therefore continue to invest behind the growth of this category.
अनुराग जोशी स्वदेश से सीसीआई ने एक जांच शुरू की है जिसके तहत वो ये पता लगाने की कोशिश कर रहे हैं कि जो एक्सक्लूसिविटी अरेंजमेंट्स ये आपके फूड डिलीवरी बिजनेस में है तो उसमें कोई उल्लंघन कोई वायलेशंस हुए हैं और उसमें कंपनी का क्या स्टैंड है और इसके चलते कंपनी के ऑपरेशंस पे कोई इम्पैक्ट हो सकता है। और दूसरा सवाल मेरा ये है कि इंस्टामार्ट को लेकर आपके क्या गोल्स हैं, क्या उम्मीदें आप आगे बना रहे हैं इस बारे में?
तो सीसीआई के ऊपर जो एक कंप्लेन हुई थी बाय रेस्टोरेंट एसोसिएशन, एंड सीसीआई ने प्रिलिमिनरी एक फाइंडिंग और ऑब्जर्वेशंस कुछ पब्लिश किए हैं। वी आर नॉट स्टिल इन रिसीट ऑफ दी फाइनल डिटेल्ड ऑब्जर्वेशंस। तो वंस वी रिसीव देम वी आर गोइंग टू एग्जामिन कि क्या क्या उन्होंने उस ऑब्जर्वेशन में कहा है। हमारे अनुसार हमने जो कंट्रीज के लॉस है हम पूरा उनको फॉलो कर रहे हैं। हमारे जो बिजनेस प्रैक्टिसेस है जो हम अपने रेस्टोरेंट पार्टनर्स के साथ रिलेशनशिप रखते हैं, they are in complete compliance with the laws of the country, and at appropriate time we will review them if we have to strengthen or any of that, and we are fully committed to strengthening of those.
All right, the management addressing the press post numbers, talking about the growth path for the company, etc. But we were talking about how there perhaps could be a bit of a feeling of FOMO once the stock lists at a premium, because most on the street were expecting it to be a bit of a discount, and a lot of people didn't even apply for the IPO, especially when it came to the HNI and retail. And as a result of which, we're seeing that big up move that we're seeing on Swiggy. It's interesting that, it's not the market which is taking Swiggy higher. It is Swiggy itself which is going, because the market's at the low point of trade, 172 points down on the Nifty, around that 23,700 mark. And look at Swiggy go, now 420, 430 rupees, 33 rupees higher.
Well, Mangalam, you put it beautifully, right? That JOMO has turned into, in fact, hasn't played a role. FOMO has come into play, and in fact the stock is at the high point of the day while the markets are clearly struggling. So sentiment is weak, and yet you have Swiggy that's up close to around 8.5% or thereabouts, and so many brokerage notes coming in today. But kudos to the management. In fact, for the pricing of the issue, I think, Mangalam, that is what you have to give it to them. The pricing was at a discount in comparison to Zomato, and they left some money off the table. But unfortunately, it didn't get subscribed in a big way.
The mood of the market was such. What's interesting is that for Swiggy, yes, we all know the numbers between Swiggy and Zomato. That Swiggy's margins are a lot lower than Zomato. That Swiggy's market share is lower than Zomato. That Swiggy is not doing as well as Blinkit as well when it comes to quick commerce.
Yes.
But all of that is at a price, right?
Yes.
If you can't have two companies which are in similar businesses and almost duopoly-like situation where one of the companies has a market cap of 2,30,000 crores. Even if you give a 30, 40, 50% discount to Swiggy, it comes at around 1,15,000 crores. The offer was priced at 87,000 crores. So how much discount is too much was what the street was looking to discover once the issue opened, and that's exactly what's playing out. At 430 rupees, it's still at a 55% discount. It will obviously always trade at a discount to Zomato, but at what proportion is something that the street will discover over the next few days.
At present, at the high point of the day, up 10%. That's the stock actually of the morning with the markets down. This one has definitely taken, has made its investors very happy. For the time being, slip into a short break. Come back, we'll focus on markets and on stock-specific action. Welcome back. The Nifty Bank is now down 350 points. So that's not too comforting because in the first 45 minutes of trade, that actually was outperforming. And keep an eye out on HDFC Bank. It's very, very close to that 1,690 odd mark. The last time around it went to those levels, it did bounce off there. So that's going to be very important because that's the highest weight on the Nifty itself. But as always, let's get you a few ideas for profit in our special segment from Money Control Pro. Neha joins us to help us out with just that. Neha, take it away.
Today's stock idea is CHEMS. The mutual fund industry is going from strength to strength with asset under management crossing rupees 67 trillion as of October end. The industry saw net equity inflows of over rupees 40,000 crore. The monthly inflows through SIP also has been rising. CHEMS, which is largest registrar and transfer agent for mutual funds, is one of the key beneficiaries of this structural growth seen in the mutual fund industry. And the same was reflected in the strong earnings performance of the company in Q2 FY25. There are many business modes that the company enjoys. First, it is a market leader in the duopolistic industry with a market share of around 68% in terms of mutual fund assets serviced. Secondly, the business is highly protected from the competition as replacing the registrar and transfer agent is not easy. Third, the financial strengths of the company includes annuity-like revenue, high operating leverage, debt-free balance sheet and robust return ratios with return on equity above 40%. Moreover, CHEMS has entered into many new businesses which are at a nascent stage currently but has a huge growth potential. The non-mutual fund revenue currently contributes around 13% to the total revenue, but the share can rise in future. All these positives, however, are priced in with the stock trading at a rich valuation. The stock has rallied year to date by around more than 70% and is currently trading at around 45 times earnings estimated for FY26. Investors, however, should keep the stock on their radar and accumulate on dips as we see the stock to be a long-term compounder.
All right. Well, on that note, though, we'll have to slip into that short break. And we'll come back. We'll continue our focus on markets. But as we take that break, well, Manglam, I think we got a programming note as well.
Yes, we do have a programming note, Nigel. As we speak, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, CNBC-TV18 Global Leadership Summit on November 14, starting 10 a.m. onwards. Power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Only on CNBC-TV18. Stocks which are on our radar. Bosch opened fairly well in today's trading session, but with the weakness that we saw in the market, the stock saw a bit of a dip from the highs as well. Currently just under the flat line, still outperforming the broader markets in terms of a price move by falling not as much. Were the results as good? Sudarshan joins in with the details of that one. Sudarshan.
So Bosch, for better part of the first hour of the trade, was largely in the green, but now in line with market move, it is the opening gains, and now it's down almost 2% or 2% from days high. Talking about the numbers, operationally, it was largely in line. EBITDA was up 14%. It has come at rupees 560 crore versus 491 crore same quarter last year. Even margin has almost improved 100 basis points to 12.8% versus 11.9%. Even commentary post the earnings were healthy. Company expects steady growth in the passenger vehicle segment in the remaining part of the calendar year, and it expects 2025 to mirror 2024's growth trajectory in India. But on the input cost, company company has flagged the caution. It says input costs so far are currently lower, but this trend is unlikely to continue in remaining part of the fiscal. So that might be one of the reasons that stock might have come off highs.
Okay, all right. Thanks a lot for that, Sudarshan. But Mangalam, tell us, every time we have the Sula management on air, they tell us about the penetration of wine is not too much. But it seems it's still over there only because the volumes are not picking up for the industry. I think it's struggling and they're saying a couple of one-offs. But you need to see growth, for any company.
For the last couple of quarters, there hasn't been growth, and that's reflected in the stock price as well. From a peak, the stock has corrected a fair amount from almost 700 rupees. It's just shy of that 400 rupee mark. And the problem is that not only is the revenue weak, the outlook in the very near term is also weak. If you look at the second quarter numbers, revenue decline of 1.1%, EBITDA as a result of which down by 24%, net profit down 37%. Overall volumes declined by about 7.5%. This schism that we're talking about, premium doing a lot better than popular, is playing out here as well. Elite and premium volumes did grow 4.1%, revenues grew by 7%. But because of the weakness that we're seeing in the mass products and urban consumption, that has reduced. Wine tourism itself grew by just about 1%. The management is saying this slowdown is transitory, led by urban consumer demand and temporary disruptions in Karnataka and Delhi. What about H2 then? Seems like the soft consumer demand continues in H2. And in this quarter itself, we have the Maharashtra election. Sula's main market around Maharashtra itself should, give it some more, caution in the third quarter. And as a result of which, while they are optimistic, they're cautiously optimistic for the second half. There would be expansions that would aid further impetus to H2 FY25 performance. But I think the market that we're in right now, the street rewards outperformance more than disappointment on even subdued expectations, and as a result of which the stock is lower despite having corrected from the highs.
Indeed, Mangalam. Well put. Thanks a lot for that. Well, let's focus on the Nifty just for a brief bit. We have seen a bit of a recovery from the lows that we saw a few minutes ago. Cut its losses. Now the Nifty is down 100 points. The Nifty Bank as well, the losses have been cut by half. So there is some bottom fishing that we're seeing on select stocks. Case in point being Trent as well as Britannia. Pull up the intraday chart. Both of them from the red trend, they have moved well into the green. But time to get in Vivek, then he's joining us to help us out with KNR Constructions. Vivek, take it away.
Well, KNR Constructions optically very, very strong number, but we need to look at the internals given the fact that there has been quite a bit of a sharp reaction. Now, when you're talking about the console numbers for KNR Construction, revenues higher by almost 87%. What aided the revenues? Number one, the company has booked a whole host of write-backs as well as claim amounts in this particular quarter. EBITDA up 3.7 times, largely aided by one-off items. Margins very strong, profitability up 3x. But that was also aided by the other income component this time around at 297 crore versus 5 crore. What gives a more realistic picture is the standalone numbers. Look at the revenues. Revenues are down 6% on a year-on-year basis. Execution slightly muted over there. EBITDA at 165 crore is down 1%. Margins at 18.6 versus 17.7. So margin expansion has come in. Profitability up by almost 3.3%. Again, the other income component is aiding. Now, when you're talking about what actually aided the PAT this time around, number one, we spoke about the other income. Also, the effective tax rate for the company this time around is a lot lower. Arbitration claims, multiple arbitration claims the company has received, and that has also aided the earnings this time around. Order book continues to remain quite strong and steady. Roads order book at close to 2,310 crore. Irrigation and pipeline sector at 2,100 crore. So net, it's a strong set of numbers optically, but of course, when you're talking about the order book, it is strong. The standalone pictures depict a more realistic picture of how the quarter went by as far as KNR is concerned.
10% up move in an otherwise very weak market. Vivek, thanks a lot for that. So that's about KNR Construction. What we'll do is with that, we'll wrap up on this edition of Chartbusters with the news that the Nifty is still fairly volatile after recovering. It has seen a bit of a smidge from the top, about 15-20 odd points. We'll keep an eye out on that. The three stocks to note. First one is Eicher Motors at the low point of trade, seeing a fair amount of sell-off. The other two were the ones that, Sudarshan called out in the morning as short calls as well. HDFC Bank, the fair weight on the index, currently at the low point of trade. And we also have Apollo Hospitals, which has seen a sharp slide from the highs, currently at the low point of trade as well. Though there is a bit of an attempt of recovery from HDFC Bank. Let's see where that goes. We wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.